Stock market lessons, the most important stock market lessons that you need to know. David Jaffe with BestStockStrategy.com. Please like, comment, share, and subscribe to this channel. If you leave a comment, I read everyone's comments and I also answer everyone's comments, and that really helps the YouTube algorithm promote my videos. So if you can leave a comment and let me know your thoughts regarding which of these topics or which of these most important stock market lessons that I share with you is your favorite. So let me know which lesson that I'm going to share with you is your favorite. The first most important lesson is that you have to make sure that you watch your size. This is something that I've spoken about on numerous other videos where options traders get extremely greedy, and when they should be trading 2 or 3 contracts, they end up trading 10 or 15. This especially happens with vertical credit spreads, where they can potentially trade like 2 or 3 naked options without having their buying power used up, and instead, because of the decrease in buying power that the reduction of the buying power reduction, or a mitigation of the buying power reduction that a vertical credit spread utilizes, instead they end up trading 20 spreads. So again, even though when you sell options you win like 90 or 95% of your trades, what a lot of people do, especially with smaller accounts, is if they can only trade 2 or 3 naked options, they will end up selling around 20 or 25 spreads, and then they'll figure that because they're going to win 90 or 95% of their trades, then this is completely okay. They'll end up winning 9 out of 10 of these situations. They'll become overconfident, and then they'll gradually increase their size. Then they'll run into a situation like we had in December of 2018 or May of 2019, and then when they have those 20 vertical credit spreads, the option price will, or rather the stock price will end up falling, and they will realize a massive loss. So you always have to have fear that you're going to lose money in the marketplace, and because I possess that fear, that is what enables me to be a consistently profitable trader. In May of 2019, when the market was down around 9%, I made money, and the primary reason was that I was extremely patient and disciplined in entering my trades, and also I watched my size. So again, the most important thing is you have to make sure that you're not greedy, because if you are greedy and you trade too large, then you are eventually going to sustain massive losses. The second important lesson, and this is probably one of the most important aspects, and this is something that I completely disagree with Tastytrade.com, is that many people trade far too often. You have to make sure that you allocate the majority of your capital and of your trading account to the best opportunities. If that means that you make 1 trade a week, so be it. If that means that you have a week where you don't trade at all because the market is selling off tremendously and there's an extremely violent sell-off, and you're concerned that you can sell a put option on Friday only to then have the market open up down 50 points again on Monday, then don't trade on Friday. Because when you're in the middle of a massive sell-off, you do not want to take risk and put your capital in harm's way. You always want to have fear that you could, and that there's a possibility of you losing money. And this is actually why we made money in May of 2019, because we were extremely patient. We did not try to guess the bottom. We did not price guess. And instead, we waited for the market to stabilize and for the market to tell us when it was ready, and when the market to tell us when we should re-enter the waters and put our capital at risk. But those people who feel some type of compulsion, or they have a fear of missing out, or they jump in and then hope, because remember, once you sell options, you're committed. Once that trade executes, you have committed capital. And then if that stock falls an incremental 5 or 10%, then not only are you giving up a tremendous opportunity where if you didn't have that position on, you could have collected around 2 or 3 times more premium, but additionally, now you have to manage that initial position that you never should have entered into. And you're also, the third thing is that you're enduring a massive amount of stress because you have a losing position on. So again, I want to reiterate that trading often will lead to massive losses, a lot of stress, and a lot of headaches, and also it's going to decrease your returns. So you have to make sure that you're disciplined, that you're also patient. And like I said before, if you have the perception of a successful trader to be somebody who is standing or sitting behind 10 screens and looking at all these indicators and jumping in and out and living a very frenetic and crazy lifestyle where they're calling out buys and sells, that is not a successful trader. That's a loser, and that is a fake guru. A successful trader is someone who is extremely disciplined, who exhibits characteristics of almost Zen-like and monk-like discipline, and they have positive habits. And they will only enter a trade and commit capital when the market gives them the indication that things have stabilized. So if the market has sold off by 50 points and the market is down 5% in a week, like it was in, I think, 1 or 2 times in May, that is not the right time for you to jump in and put your capital at risk. Instead, you should wait, and if it means that you don't make any trades that entire week, then so be it. If the market decides to go up 5 or 6 straight days and none of the stocks that you're watching are currently at the low end of their recent trading range, that means that you do not make any trades. Instead, you patiently wait. You should be disciplined for those stocks to fall, because they will. There will definitely be a retracement of prior gains. You do not want to chase stocks. And this actually brings me back to another example, how in late July of 2018, I made money in Facebook when Facebook fell from around $218 to $175. And the reason was Facebook in early July of 2018 was trading, I think, at around $180 or $185. It went up almost every single day and appreciated in value to 218. So I just patiently waited, and I did not chase Facebook at all. Instead, I waited for it to fall to around 175, and then I ended up selling puts that were extremely profitable. So whereas other people, if they chase and they get too greedy, will lose money, you can look at crisis, quote unquote, situations, and you can actually profit off of them. The third major lesson in the stock market is that nobody has, quote unquote, secret knowledge. All these people who are telling you that they have these 3 trading patterns, these indicators, how they were able to turn $5,000 into $5 million, and you can discover and they can teach you these 3 magical patterns, it's complete BS. So nobody has magical or secret knowledge that is going to turn you into a successful trader. My course teaches you the strategy, but probably the most important aspect that the course teaches you is discipline and patience. It instills in you the characteristics that you will need in order to be a consistently profitable trader. David Jaffe with BestStockStrategy.com. Please like, comment, share, and subscribe to this channel. I read everyone's comments and I respond to everyone's comments. And by you leaving a comment, it definitely helps promote this video, because it tells the YouTube algorithm that there is social engagement on this video. Please leave me a comment regarding what is your favorite takeaway and what's your favorite lesson for being a profitable trader in the stock market. If you want to receive free training, you can go to BestStockStrategy.com and enter in your email address. And if you have any questions, leave a comment below and I will be sure to answer it.